You're listening to the K-State Radio Network and Agriculture Today. Welcome once more as we venture into the latest from the grain market scene now. Dan O'Brien with us from his office in Colby, Northwest Kansas, grain market economist with K-State Research and Extension. Dan, as you're well aware, out in your neck of the woods, fall harvest is rolling now in the better part of Kansas and elsewhere, and considerable progress been made in a lot of locations because of open weather. So are the markets now starting to react to any extent to harvest results, do you think?
Well, certainly the U.S. harvest rolling in and no, I guess, tremendously impactful reports of yield disappointments. In fact, if anything, for the soybean market, I guess optimistic reports. You're seeing that the lead Dees corn and November soybean futures contracts do anything but rally to major highs. Now, corn kind of surprisingly has moved over the last month or so a little bit to the higher side, but with harvest pressures here, just not a lot of I guess, enthusiasm to really run to the higher side. Particularly on soybeans, though, you see soybeans having dropped off strongly. Or they're quite weak. I guess that's a negative way to look at it, drop off strongly. But long-term downtrend since really June, with some volatility during the summer, and you can just put that right on the trend line, moving down at a steady rate and lower here of late. What's kind of defied that has been the wheat market, as we've seen. Wheat prices had come down off of late July, early August. Late July highs had fallen down into early September, and now have jumped back up. A number of things happening internationally in terms of concerns about supplies in Russia. Russia still has equivalent of $60 a ton fee that they're charging just to try to keep things in control. Ran across some information talking about wheat protein premiums coming in and really affecting the markets. Of course, this follows on the heels of what's happened in the hard red spring wheat areas and white wheat areas of the United States and Canada. So just an interesting time. Wheat markets in Kansas, as we speak, the weakest wheat price being offered right now of the six locations that I try to follow, between Colby, Salina, Topeka, Garden City, Hutchinson, and Columbus, taking the highest price that's offered in each one of those locations. Columbus was at $6.90 per bushel, but here you see Colby $7.05, Salina $7.16, Topeka $7.26, Garden City $7.21. That's Garden City. That's not the heart of export world generally. And Hutchinson at $7.21. So it's pretty strong wheat prices. Interesting along this theme, when you see where we've held up on corn and sorghum prices, corn really pretty consistently in the range of 514 up to 534 or so. For all locations except in Garden City and Hutchinson, it's up to 559 for the top bids there. Grain sorghum holding up decently, really pretty consistent in a range of 534 to 559 also. So the highest bid for sorghum comes in for the locations we're looking at in Topeka, which is very much an export oriented situation. Soybeans, cash prices for soybeans, if anything, that's what's reflecting probably more of a downside. And just as with the futures, also with the cash markets in Kansas, spot prices for beans, a low of 1162 in Garden City, but then then you see prices range going up to a high of 1207 in Salina, 1205 Topeka, 1212 in Hutchinson, Colby 1182, and Columbus 1177. And you stand back and wonder what is affecting the soybean market. Well, one thing I guess has to do with the pace that China either does or doesn't employ is coming into the markets and buying quite a bit. Here this last week, we had U.S. soybean shipments about 34.5 million bushels, need a pace about 43 to hit the USDA's projection. By the way, there is a USDA report coming out on Tuesday, and it'd be interesting to see where numbers go. Generally, from taking a little side note here, Eric, for corn and soybeans, not really a lot of expectation that the ending stocks figures will change, but there is expectation that the U.S. wheat ending stocks will tighten up even more. And they were already dropped to 615 million. So if they go to 600 to 575, that's getting into pretty tight country for wheat supply demand and as such and in the United States. So we'll see where all that goes.
Right. Do want to bring this up though, with all that considered, Dan, looking at the bids around Kansas, do you see any signals to producers to be storing harvested grains or wheat from this summer?
Well, one thing that I do notice is that there aren't a lot of forward contract bids. Of course, we're in the midst of harvest, but when I look on some of the commercially available grain price bid tools that you can look at, I see cash bids, but not much out there very long. So you're kind of forced to look at the futures because the forward contracts, at least right now, really aren't showing up. That'll come later post harvest probably. But for corn, closed yesterday. D's corn at 534, July 548. So it's about 14.5 cents over, let's see, December, January, February, March, April, May, June, July. I'd say 6 months, and 14 cents isn't a lot. So not a lot of motivation there, at least in the futures, unless basis would really get strong, and it could. But as the futures aren't giving a lot of motivation to store. For soybeans, November closed yesterday at 12.47 and a quarter. Next July, and you might have to hold soybeans out that long, but you're at risk with South America. If we have a moment, we'll talk about that. But July closed yesterday at 12.81.5. So from 12.47 and a quarter to 12.81 is about it's about 35 cents over 7 months, about 5 cents a month. And normally if we were really defensive, we'd say, gosh, that's 5 cents a month. We'll take that. That covers storage. But with the volatility we've had of late, we can have 5 cents in the middle half hour of a day somewhere and not be that impressed by that. So we'll see, I guess. And for wheat, D's, of course, now we're looking at, the harvest is far done on hard red winter wheat in Kansas. We're looking to see what we can get for storage if we haven't sold it already. D's closed yesterday at 741 and a quarter. May, we'd probably be selling in May, I would think, if we held that long, prior to the next harvest in late June, early and on into July. 741 to 752 and a quarter, and that's just a few cents. And again, we have enough volatility that that's probably not a big incentive for people. Pardon me. So I do want to come back to the South America thing.
Right. And that's a major part of this story, because Brazil is just about to roll out another record soybean crop.
They're anticipating, their plan is, and this CONAB group came out yesterday. It's sort of an overall trade overseeing information group that operates down that area. Strong increases everywhere. They saw the corn drought for second crop corn last year as something that was a hiccup. They're coming right back at it with even more soybeans to increase, et cetera. So, but that has been the norm year after year. They're planning on increases, and they just get side railed by droughts and problems that hit. That said, Bryce Anderson, former DTN emeritus, meteorologists came out an article yesterday talking about how we're looking at the likelihood of La Nina getting stronger, and that would lead to a drier fall, would impact our here in the U.S. our hard red winter wheat areas. Could be a wetter spring, etc. But what's more the issue is dryness down in those key areas of South America. So here we're talking about just kind of so storage prospects, etc. In the one hand, but then out the other side of my mouth, you say, well, gee willikers, there's a likelihood with the weather pattern of things being dry down there. And I know what their plans are. They're just like us. They have strong, and Russia and all these countries, they have strong plans for production. But La Nina is in town, and that could have a lot to do with what they actually get. And again, it would be dry during a time frame when they're planting those crops in the next several months. So we shall see. But I know what the markets are kind of planning on. No big issues, no problems. But the weather forecasts sure raise a worrisome specter on South America being able to deliver on its hopes and promises.
One further thing here, if we might, Dan, and it is an attention grabber to say the least in production agriculture, crop production more specifically, these skyrocketing fertilizer prices. Couple that with the questions about availability of fertilizer. One starts to look ahead, as we are wont to do, to the next production season, almost as the combines roll. And the thought here is, will this potentially push 2022 acreage more towards soybeans and away from high fertilizer use crops like corn?
Well, it's sure possible. And I ran across an article that we have in our notes on Ag Manager it's about 2 or 3 pages worth of information, but it leads like this. That's out of Fertilizer News. How the fertilizer industry is swarmed by black swan events, from the impacts of Hurricane Ida to political and climate issues, and China holding back on fertilizer, elements of fertilizer coming into the United States, all manner of issues at play. So I guess what we hear in the quote country is great concern about gaining access to fertilizer for crops, and corn with its strong need for any feed grain, actually, with their need for 1.1, 1.2 pounds of N per yield goal, and is a direct hit on that. This would be the year probably for people to mine down any fertilizer in the soil profile. But could be year 2 to look at wheat, if they can get enough fertilizer to get wheat going, or have the ability to top dress out there next spring. Then wheat with its high prices could be a way for people to mitigate some of what's now is the risk of getting the inputs. And we hear both fertilizer and herbicides, pesticides being talked about in terms of this. And another factor in play here is the sky high jump in natural gas, key element for making a lot of our nitrogen fertilizers. So I think without being panicky, it's really time to look closely at what our cost of production will be. And in light of that, we were talking earlier where the futures are at. You look at D's corn of next year at 527 per bushel. Is that, if we have sky high, if we have strong inflation in input costs, is 527 with a basis adjustment, is that break even? And that's kind of what we're staring at right now. So we shall see, but that those are the type of issues and challenges that we're dealing with, and this epidemic of tight supplies in almost every ag and energy commodity is all coming home, and they're working together to bring the cost of things higher. and just a challenging time. That may be more the issue in the next 6 to 12 months. That the issue of getting inputs to get the crops in, than even with where the prices would go.
Well, as our producers are well aware, it's always something in crop production. Dan's notes on the markets.
I'm sorry, Eric.
All right.
Go ahead.
Now we're good. Dan's notes on the markets on agmanager.info. As always, Dan, thank you. Next week, we'll visit once again.
Thanks, Eric. Take care.
Grain market commentary from Dan O'Brien, grain market economist with K-State Research and Extension. On this Agriculture Today.